Avoid these rookie mistakes when starting your trading career. Welcome to today's video. If you're new to trading or just starting your trading career, this might be the most important video you watch this year. Today, we are diving deep into the biggest rookie mistakes that can destroy your trading career before it even begins, and more importantly, how to avoid them. Trading can change your life, but it can also ruin it if you fall into traps that almost every beginner walks straight into. Stick with me to the end, because I'll also share a powerful mindset shift that separates successful traders from the ones who quit. And don't forget, if you find this helpful, subscribe, like, and join our free Telegram community for legit trading tips. The link is in the description. Let's jump right into it. Mistake 1. Trading without a plan. First up, the biggest and most deadly mistake, trading without a plan. Imagine trying to build a house without a blueprint. That's exactly what trading without a plan looks like. You need to know what you're trading, why you're trading it, when you're entering, where your stop loss is, where your take profit is, how much you're risking per trade. Most beginners just jump into trades based on feelings or random indicators without a clear, tested plan. Solution. Before placing even one trade, write down your trading strategy. Test it on a demo account. Track the results. If you can't explain your strategy to a 12-year-old, you don't understand it well enough. Mistake 2. Risking too much. Number 2. Risking way too much per trade. Rookie traders think, if I bet big, I can make big money fast. Wrong. That's how you blow your account. A professional trader risks 1% or less per trade. If you lose, it barely scratches your account. If you win, it builds slowly over time. That's sustainable growth. Example. If you have a $500 account, risking $5 per trade is smart. Risking $100 per trade is gambling. Rule. Always know how much you can lose before you enter a trade. Mistake 3. Revenge trading. Next up, revenge trading. You lose a trade. You get angry, you jump into another trade without thinking. And then you lose even bigger. Sound familiar? This emotional cycle is a career killer. Real traders treat every trade as one isolated event. The last loss has no connection to the next opportunity. Solution. After a loss, walk away. Take a deep breath, reanalyze the market calmly, and only trade again when you see a valid setup. Discipline is everything. Mistake 4. Chasing signals and indicators. Mistake number 4. Chasing signals and relying too much on indicators. New traders jump from signal group to signal group, indicator to indicator, looking for a magic formula. But here's the truth, there's no magic indicator. The real edge comes from understanding price action, reading market structure, being patient, managing risk like a pro. Indicators are tools, not magic wands. Use them to assist your analysis, not to make decisions for you. Learn to analyze the market with naked charts. If you can read price action alone, indicators become bonuses, not crutches. Mistake 5. No patience. Mistake 5. Zero patience. Most beginners expect overnight success. They expect to double their account every week. When it doesn't happen, they jump systems, or worse, overtrade to force profits. Trading is a marathon, not a sprint. It takes time to build skill, experience, and emotional control. If you stick with it, you'll be shocked at how good you become after 6 months, 1 year, 3 years. Key tip. Set realistic goals. Focus on consistency, not jackpot wins. Even 2 to 3% growth per month compounds massively over time. Mistake 6. Ignoring trading psychology. Mistake 6. Neglecting trading psychology. Beginners spend all their time learning strategies and zero time mastering their mindset. But here's the truth. Psychology is 80% of trading success. Even the best strategy will fail if your emotions are out of control. You need to accept losses without anger, stay calm during wins, stick to your plan no matter what. Trading isn't just charts, it's mental discipline. Practice meditation, journaling, trades, setting daily emotional goals. Like, today I will stick to my plan no matter what. Mistake 7. Not tracking performance. Mistake 7. Not tracking your trades. If you're not journaling your trades, you're not improving. A trading journal helps you see what strategies work for you, what time frames fit your style, what emotional mistakes you keep. Making simple tracking equals massive improvement over time. Action step. After every trade, record, entry and exit points, reason for entry, emotions, felt result, win or loss. Review your journal every week. It's like having a personal trading coach. All right, let's wrap this up. Starting your trading career is exciting, but it's filled with hidden traps that can kill your dreams before they even start. Today, you learn the most common rookie mistakes: trading without a plan, risking too much, revenge trading, chasing signals, lacking patience, ignoring trading psychology, failing to track performance. Now that you know them, you're way ahead of the average beginner. If you stay disciplined, keep learning, and focus on consistency over excitement, you will succeed. Join our free Telegram community for more real trading education and daily tips. https://t.me/AFTechTrades. Subscribe, like this video, and turn on the notification bell so you don't miss any future lessons. Thank you for watching. Stay sharp, stay patient, and I'll see you at the top.